Welcome to the Zzeem webinar studio. Today we're going to focus on how to keep your board informed and engaged with the information that you share with them. As a CEO, you always try to find a balance between giving the board enough information to make a decision without providing so much information that the important details get lost in the volume. I'm going to share with you some suggestions to help keep your board on track by focusing on what really matters and ensuring your board digests and absorbs the information that they need to know. I'll show you how to prepare a management report that gets the key information across in less than 5 minutes. And I'll also give you tips for your supporting reports, including your financials. For those of you who are regular attendees at our webinars, you know that we host these webinars to give you timely, valuable information that you can take back to your association and use immediately. These webinars also give us an opportunity to help you see some of the work that we do. So when you're looking for help, we hope you'll think of us. So let's get started. Why does this matter? Well, your board has to make informed decisions. That's why they're there. And the only way the board can make informed decisions is if they have the information that they need to make those decisions. It's also critical that your directors get meaningful and I want to say digestible information. You can give them an enormous amount of meaningful information, but if it's overwhelming and it's not digestible, they won't be able to absorb it. So let's talk about what digestible really means. Apparently, there are studies out there that tell us what the average human attention span is, and apparently this has been going down over time. Keep in mind, I do not have studies to cite for this. These are various references that I've found online. The actual numbers for real studies may be different, but I don't think this will come as a surprise to you that the average human attention span is around about 8 seconds. Now, audience attention span is apparently around 8 to 10 minutes. I would say, based on my own anecdotal experience, I would say that the audience attention span is probably at best 8 to 10 minutes. So whether you're looking at it from an individual's attention span or you're looking at it from the perspective of your audience, being your board of directors, you do not have a lot of time to get the message across. Let me give you an example. The way you present things has a big impact on how people absorb things. And you've got to be thinking about, who am I presenting these things to? What is their mindset? What resonates with them? And then make sure that the way you're presenting it actually is going to make sense to that group. So let's take an example here. We've got a list of numbers. There's no information about what these numbers mean. So it's pretty difficult just giving somebody a set of numbers to help them to understand what that really means. Now, what I'm going to do is in the next slide, I'm going to show you what each of these numbers represents. And I'm going to ask you, get your keypad ready. See if you can tell me what these numbers actually mean now that I explained to you what each one is. 2 1/4 reflects the amount of flour we're going to use. 1 reflects 1 teaspoon of baking soda, and so on. Does anyone have any idea what we're looking at here? Exactly. It's a recipe. Okay, so for those of you that are familiar with recipes, maybe you don't need any more information than this. Now, clearly one of you is at least somewhat familiar with recipes because you've said this is a recipe for cookies. But if you don't know cookies and you never bake cookies, you're not necessarily going to know by looking at this, it's a recipe for chocolate chip cookies. The people that are going to know this are people that are familiar with cookies and people that are familiar with making cookies. They're going to realize that that's what this is. But if you're not dealing with an audience that knows anything about cookies, giving them a list of numbers, even with an explanation for what each number means, doesn't give them the big picture. So think about that while you're trying to decide what kind of a picture you want to share with your board of directors in a way that they're really going to understand. So it all comes down to this. You have to give them the right information. You have to use that information to provide the right comparatives and metrics. So information in a vacuum means nothing. How are we going to compare that information and what are we going to compare it to? And then the format as well too. What kind of format are you going to share this information in? I'll give you some tips for each area. But let's go back quickly to what the CEO's job is. What we're looking at here is we're looking at, what do CEOs and indeed senior management need to know about giving relevant meaningful and digestible information to their board of directors. As a CEO, you know that you really need to understand your business model. You need to understand where the money comes from, where the money goes, what makes members decide to join the organization, what makes them stay. You need to know that. It's part of your job. You also need to have an idea how to take the organization forward. Now, what we use is the high performance membership organization model, and that gives you something to shoot for so that you can get better and better at the business that you're doing every year, regardless of what the metric is that you use to decide how far along you are in terms of that journey is up to you. But as the CEO, you're always trying to make the organization better, more efficient, more effective, higher member value, all of those things. Finally, from a governance perspective, it's absolutely critical that you're able to communicate effectively to your board, because if you can't do that, then the board can't do their job. And that's going to make your job as a CEO and the job of your staff more challenging, and it's going to be more difficult to accomplish things. So communication with your board is critical, and it can be the difference between something being very challenging and something being very easy. So let's start with the right information. First step is making sure we're collecting the information that we're going to need. From a big picture perspective, the elements that you're going to need in order to report effectively to your board are, at a high level, a relevant and current vision and mission, a relevant and current strategic plan with some very clear, succinct objectives in it, and then a business plan and a budget. You're going to need all of these things as a framework for your communications platform. That's what you need at a big picture level. Now, in terms of what you're trying to tell the board, you really need to focus on what does the board need to know. You're going to give them all sorts of information, but at various points of time, some of that information is going to be more relevant and more important at that moment than other things. So basically what your board needs to know is three things. Number one, how are we tracking against our plan and our budget? So how are we tracking against our strategic plan? How are we tracking against our budget? What are the risks and the opportunities that are meaningful at this moment in time? And then what directions, decisions, and actions are needed? That's really what your board needs to know, those three things. But you have to keep it in the moment so that you're focusing on the things they really need to know right now. So let's just talk about the fundamentals of management reporting. Basically, what you need to do when you report to your board, you need to focus on three areas. You need to focus on the strategic plan. How are we progressing against our strategic plan? You need to focus on sustainability and member value. Now, these are two separate things, but they are inextricably linked. And basically, sustainability and member value is what are we giving to members and how are they reacting to it in terms of joining the organization and renewing their membership with the organization. The third area is finance. So you've got your three areas: strategy, how are we performing against our objectives? How are we performing against our member value proposition and how are members reacting to that? And then our financials. Now, you're going to be giving them reports in all those areas, and I'm just going to refer to them right now as backup reports. You'll also need a management report. And basically what the management report is it's saying, here's all our backup reports. You should be reading them. You should be understanding what's going on in each of these three areas: strategic plan, sustainability and member value, and finance. But in the management report, I'm going to tell you what I need from you right now. This is what you absolutely need to focus on, and you're going to make sure that you can deliver that verbally in 5 minutes or less. And I'm going to suggest a lot less than 5 minutes, because if you're going to have a dialogue and go back and forth on things, or there are things that you particularly want to emphasize, you may need some wiggle room there. So let's start with our strategic plan reporting. In terms of what's in your backup reports, you want to make sure that you've got these three areas covered: strategic plan, sustainability and member value, and finance. Now, in terms of your backup reports for your strategic plan reporting, what's the right information? Well, you're going to need your strategic objectives. Now, if you've done a thorough job of your strategic plan, you'll not only have the objectives, but for each objective, you'll have milestones for that objective. Call them activities, tasks. Basically, here's how we know when we've got to this level. What are the target dates for each of those milestones? And then finally, who has accountability for each of those milestones? That's the information that you're going to be sharing in your strategic plan reporting. Now, what are the metrics? The metrics are very simple. For each milestone and target date, what's the status? Are we done? Are we heading to the target date? Are we on track for our target date? Are we not likely to meet our target date? So basically what we're looking for, our metric here is the status of each milestone and against the target date. That's what we're looking for in our strategic plan reporting. Now, in terms of the format, dashboards are popular right now, and for some people that works really well. Personally, I prefer a checklist of the milestones and the dates associated with them, and just a word beside each one so that I can put it in the context of the whole strategic plan. But that's just a question of what you as the CEO and the senior management team and the board find best. It's up to you to figure out what is going to resonate most effectively with the people you're sharing this information with. Now, let's move on to number 2, our sustainability and member value reporting. Keep in mind, in order to do the reports, you have to start with the right information. So make sure before you get started with any of this that you are collecting the right information. What you're going to need in order to do these metrics is you're going to need your total number of members, which presumably is something quite easy for you to have in front of you. You'll need to know of those total number of members, how many or what percentage of them renewed in the past year, and how many of them were brand new to the organization in the past year. You're going to need to know something about their satisfaction rate. You're going to need to know something about the take-up by your members of your events and your programs. So how many people show up? How many people participate? You're going to need to know something about your volunteer engagement. How many volunteers do you have? What are they most likely to volunteer for? And then you're going to need information about the impact of your government relations and stakeholder relations. You're going to have to find some way of measuring that. Now, I just want to draw your attention in particular here to volunteer engagement. This is something that we often don't find that organizations are tracking, and it's a bit of a sleeper, but it is really an excellent metric for tracking the sustainability of the organization. Keep in mind, what are we all talking about? What do we all want from our members? We want engagement. Now, the most engaged form of member is one that is actually volunteering to do unpaid work. That is your super engaged member. So the more super engaged members, effectively, the higher the level of member engagement. And keep in mind, the more people that you have volunteering, the more people actually understand what's going on behind the scenes, the valuable work the organization is doing, what it takes to make that happen. Those volunteers are also super knowledgeable. They've got a ton of credibility as well, too. Those volunteers have more credibility when they talk about the accomplishments of the organization than even you as a CEO have, because you as a CEO are getting paid to do that. These volunteers are not, and if they figure the organization is doing a great job and they say it is, that really resonates because they've got the credibility of having no skin in the game to suggest that's true. They're volunteering, they're giving of their own time, and they wouldn't be doing that unless they saw there was value in doing it. Now, we know what the right information is, we've just talked about. Let's talk about the metrics that we need to have here. What we need to know for our sustainability metrics are 3 things. What is our new member attraction rate? What is our member retention rate? What's the percentage of members that we actually retain? And what is the satisfaction rate? Now, these numbers are easy to calculate. You can quickly put them into a spreadsheet and your reports can just spit them out. As long as you're calculating the information, I'll show you the algorithm to make that happen. Your member attraction rate. First of all, for your sustainability metrics, you want to have targets. It's not enough to just track them because that's just looking at numbers in a vacuum, and you need to be able to compare your numbers to something. So you need to have targets. For your member attraction rate, let's keep in mind with member retention, it's really hard to retain more than 90% of your members because there's always friction in the system. You know, companies absorb, they go under, people die, people move on, they change professions. There's a certain percentage that you are always going to be losing in terms of members just because of the stuff that's happening with the day-to-day. So the chances of getting a retention rate that is substantially over 90% is not great. But you want to make sure that you're shooting for a target rate at 90% or better. That's a good number to be shooting for. Your member attraction rate, by definition, let's say your target rate for member retention is 90%. Your new member attraction rate has to be at least 10%, or if you hit your retention rate, you're not increasing the overall numbers of your membership. So think about what your target rates are and then calculate them. Let's talk about our attraction rate first. What you're going to need there is if you're calculating your member attraction rate for this year, 2024, you're going to need to know what the new members were that came into the organization in this year and where you started the year in terms of your numbers. In other words, How many members did you have when you started this fiscal year? If we know that we had 100 members at the beginning of this fiscal year and we had 20 new members, then it's just a question of dividing 20 by 100 and our member attraction rate is 20%. The member retention rate, the way we calculate that is basically just look at the same numbers and then take out the new members. So basically we need to know that at the beginning of 2024, we had 100 members. At the end of 2024, we had 110 members. Take out the new members, which is 20. That means that 90 members at the beginning of this year actually renewed, which is 90%. Now, I do see a question about getting a copy of the slide deck. Absolutely no question whatsoever. Just let me know and I'll send it to you. Now, let's look at our sustainability metrics. This one is, it's anecdotal, just like our member attraction rate and retention rate, but you want to be shooting for a high number here. Now, if you're going to do member surveys and judge member satisfaction, I really do encourage you to use a professional. A research professional is going to tell you how to ask the questions and how to interpret the answers. But let's just say for purposes of argument, you ask your members to say on a scale of 1 to 5, how satisfied are you? Where 5 is incredibly satisfied, I couldn't ask for more. What happens when people are giving you a 1 or a 2? Well, we can figure that means not very satisfied. What about a 3? If you get a 3, does that mean that people are satisfied? Does 3 mean I will absolutely renew? So you've got to think about how you're judging satisfied. What does satisfied mean based on the scale that you're actually using? And what is our target rate? Don't look at this as a pass or fail on an exam, for example. If you got a 75% on an exam, you probably figure you're doing okay. I mean, that's a good solid B. What's wrong with that? But if only 75% of your members are giving you a 4 or a 5 on member satisfaction, that probably means that a good chunk of your members are going to be leaving. 75% means about half are not satisfied. So keep in mind how you ask these questions and how you interpret the answers. That's our sustainability metrics, those 3 elements. Now let's look at member value performance. Let's look at what our member programs are and what the level of engagement is in our member programs, because the whole reason why we're providing member programs is to make sure that our members are satisfied, that they're going to renew, and they're going to attract new members to join our organization. So what we're looking at here is for all of our member programs, what does our member engagement look like? Now, there's basically several ways you can look at calculating your member engagement. First of all, you want to know what are the members that are taking advantage of your member programs and what percentage is that? So for each member program, how many members are taking advantage of it and what is that as a percentage of your overall membership? If you've got member programs that are highly popular, but they're only highly popular with 10% of your membership, that means there's a lot of your members that are finding programs that really aren't all that interesting to them. So you want to kind of be looking at the ROI you're getting on providing those member programs. And that's really the ROI to your underlying members. You need to be looking at the dollar per member spent. So if you're looking at the number of members that are actually participating in a particular program, you should know from your regular income and expense metrics what it costs you to deliver that program, and that can tell you the dollar you're spending percent by the number of members that are actually attending. Also look at the percentage of the members that are actually volunteering. When you've got a lot of members that are volunteering for a particular program, that means that they're very interested in it. So the percentage of members that you have that are volunteering is really helpful because it gives you a sense of the level of enthusiasm associated with that program. Look too at your government and stakeholder relations programs. What is the impact of those programs? Now, of course, the impact is the influence or progress you're making against the base case. But it also is what percentage of members are involved in your government and stakeholder relations committees? What is the open rate on the communications you're sending to your members on government and stakeholder relations? And perhaps most importantly of all, of those people that you're looking to influence, how often do they call you? How often do the people in government that you're trying to influence pick up the phone to you or send an email to you asking for information? That tells you how important you are and your information is to them. So look at different ways you can measure the impact and the influence of what you're doing for government and stakeholder relations. And keep in mind, when we're talking about your influence against the base case is not where it was this year or last year or 5 years ago. It's where it would have been if you weren't involved in doing your government relations or your advocacy work. Sometimes it doesn't look like the needle has moved, but it really has, because if you hadn't been doing what you're doing, it would have gone backwards. So keep in mind that it's not just a question of whether you're moving ahead in terms of your metrics. Sometimes it's what you're avoiding in terms of negative consequences. Now, let's talk about financial reporting. This is something that I find often gets rather poorly done, and as a result, you can often have a board of directors where a lot of them really aren't all that current on what's going on with the financials. As a CEO, you need to be, and you need to find a way that it works well for you and for your directors to share that information. So first of all, let's talk about management reporting versus external reporting. What we're talking about here in this particular webinar is management reporting. So this is what the CEO and the senior management team is telling the board of directors. It's not what you're telling the members. What you're going to be giving the members is much more high level. What's going to be on your website? You're going to be sharing your audited financial statements. If you do an annual audit, a high level is what you're sharing from an external perspective. But internally, we're going to be providing more detail. But we still need to make it succinct and relevant. So from a financial perspective, what is the information that we actually need to start with? You're going to need the information that's in your general ledger, and you're going to figure out how to calculate, analyze, and display that. And you're also going to need consistent financial reporting. Every month, every year, you want to be consistent from 1 month to the next and 1 year to the next in terms of how you're reporting things. I sometimes see that CEOs sort of delegate that to their bookkeeper or their accountant to decide how it's going to be displayed. Keep in mind, unless your accountant is looking for exactly the same things as you as the CEO and your board of directors are looking for, the way they choose to put it together may not make sense for you. But it has to be consistent, because if you've got different line items from 1 month or 1 year to the next, how can you compare what it looked like at this time last year? And that is a critical metric, looking at where we are now and where we were at this time last year. So the right information also includes consistency of reporting. So let's look at the metrics. What we want to do is we want to make sure that you know at least these 4 things. How are you doing in terms of your actual numbers versus your budget? That's critical. That should be reported in all of your financial reporting. You want to know where your money's coming from. So what are your major revenue sources, and how much are you getting from each of those revenue sources? Cash flow forecasts. These aren't necessary for everyone. They are time consuming. They can be complicated. You don't want to have to be doing cash flow forecasts, but if you don't have really anything in the bank in terms of a surplus and you're really literally running it from 1 year to the next, then there's always the possibility that you could hit a wall and run out of money when you still have bills to pay. So you want to have a cash flow forecast so you can manage your expenditures to be in line with the revenue that's coming in the door. So if you need a cash flow forecast because you don't have enough money to get through an entire year, if you hit a wall, make sure that you're doing your cash flow forecast. But if not, you certainly do need to be calculating your reserves. And what we want to be looking at in our reserves is really how many months of operating expenses could our reserves actually cover. That tells you what kind of runway you've got if we run into a difficult situation. So your reserves are shown on your balance sheet. And I don't know about you, but balance sheets have always made my head spin. It took me a long time to really understand how to look at a balance sheet and decide what we really needed to be looking for. But really, when you're looking at your balance sheet, what you're looking at is what are our net assets. So in other words, what are our assets versus our liabilities? And this is particularly important at year end, because at year end, you're going to know if you had a surplus, then we added to our net assets. If we had a deficit, then we took away from our net assets. Now, when you're looking at your net assets, you've got to be careful that what you're looking at is money that you can actually spend. So what you're looking at is your liquid assets, because these are the assets that if you needed them tomorrow, you could spend that money. So that means cash in the bank. That includes GICs, because invariably you can cash in a GIC with very little negative consequences. And accounts receivable, but only accounts receivable that you are almost certain of collecting. If you've got a bunch of accounts receivables because you've invoiced your members from last year, you can't assume that all of them are going to renew. So those accounts receivable, some of those are dubious. So you got to be careful that you're looking at your liquid net assets when you're talking about what money could I use if I needed it right away. Now, illiquid assets still matter. It's not like it's irrelevant what your liquid assets are, but it's not necessarily money that you can realize at the value it's on your balance sheet at that moment in time. If you're sitting on a piece of real estate, whatever amount you are showing it as on your balance sheet could be much higher or much lower than what you could realize in the current market. And keep in mind, it would take time to sell that asset. So it's not immediately something you can turn into cash. Accounts receivable that you had fully expected to recover but are now more than 90 days old are definitely in the illiquid category. Anything that's restricted. If your board has made a decision that some of your surplus is going to be restricted and it can only be used for certain types of expenditures, then it's not fully liquid because it can only be used for a certain type of expenditure. And if that's not operational, then those aren't assets you could reach out and touch tomorrow. So divide your net assets into liquid and illiquid and pay attention to what the liquid assets are, because that's basically money you could spend if you needed it tomorrow. Okay? Those are the most important things to be thinking about for your balance sheet. And you should be showing your balance sheet in a way that allows your directors to understand those numbers very, very easily. Okay, let's look at the income statement. In your income statement, you want to be showing where you are right now, which every income statement will show you, where you are against your budget and the variance from your budget, and make sure when you're showing your financials, you show where you were last year at this time. So where were you this time last year? That's a really important piece of information. And it's especially important when you're only a few months into your current fiscal year. You know, if you're comparing your revenue and your expenses against your budget, and you're very early in your fiscal year, knowing where you are in terms of your current situation versus your budget is not that helpful, because there's going to be timing considerations that are happening as you go through this. But if you are able to compare where you are, not just with your budget, but where you were last year at this time, that's a really important additional piece of information. For example, look at this income statement and look at the revenue part of it. The first column is what any income statement would show you. Here's our revenue, here's our expenses, here's our nets as at October 31st, okay? Now let's look at our budget. In terms of our budget, we had planned on spending $2 million over the course of the year, sorry, we had planned on having revenue of $2 million over the course of the year, and currently we have $1.5 million. That doesn't really tell us anything at this moment in time. We know that we are not at budget yet, but it's only October 31st. Are we likely to bring in another $500,000 in the final 2 months of the fiscal year? Well, let's look at where we were last year at this time. Last year at this time, we were at 1.3 million. Right now, we're at 1.5 million. Maybe that's cause for optimism, because maybe it means we're actually doing better this year than we did last year. Or it might just be a timing consideration. Maybe for some reason, revenue from the conference or membership or other just came in a little bit faster than it did last year at this time. So you're using that number to decide, are we better off than we expected? Are we likely to hit our budget? Always you're using the numbers you've got to try to estimate whether you're likely to hit your budget or not. And if all of your membership revenue comes in the first 2 months of your fiscal year, and that's it, that's 100% of your revenue, then you know within 2 months of your fiscal year whether you're going to hit revenue or not. So timing is an important consideration, but it's really important to know where you were last year at this time. So make sure you've got those comparatives. This is what I suggest your income statement should look at. Your first column shows where you are at this moment in time. Your second column shows where your budget is. That budget is not going to change. It's going to be the same for every single month that you do your financial statements, because you did it before the year started. Your variance between where you are now and your budget, where you were last year at exactly this time, and what that variance is. It's a very simple way of preparing an income statement, and any bookkeeper can do this for you. Now, what else do we want to know? We want to know where our revenue is coming from. So we want to know what our sources of revenue are. If we've only got one source of revenue, and that's membership dues, then our risks are higher. because it only comes from one source and we don't have anything else to balance it out if we run into a temporary or lengthy challenge with our membership fees. You also want to know what kind of expenses we have for each program, because when you're looking at a program, you want to know what kind of member engagement you got with that program, and you also want to know the expenses. If the expenses are out of line with member engagement, then that might be a program that you want to consider replacing with something else. The other thing to be looking at is your administrative expenses. You want to be looking at what your operating expenses are as a total of your entire expenditures. This is something that you should be tracking on an ongoing basis. Administrative expenses are generally your biggest line item. This will include compensation and other considerations. Often this is your biggest line item. So if this is steadily going up as a percentage every year, that's something you definitely want to be looking at. So if we want to have our revenue by sources and our expenses by programs and our administrative expenses, we want to make sure that our income statement looks something like this. Keep in mind, you want to make sure that if you have line items for revenue, you want to have similar line items for expense. So if we've got a line item under revenue for the conference, we want to make sure that under expenses, we've got a line item for the conference. And so we can compare those two things. We can look at conference revenue was 600,000, conference expenses was 250,000. Great, I know what I made on the conference. I'm going to encourage you that if you have sponsorship revenue, break it out into a separate line item, regardless of whether it's for the conference or not for the conference. Have a budget item associated with sponsorship and make sure you're tracking it. So make sure what you're doing here is your revenue and your expenses are easily comparable. They are the same line items year over year, month over month, and you can see in the revenue part of your income statement where the money is actually coming from. You can see for this organization, it's certainly they are heavily reliant on membership, but the conference brings in a good chunk of their gross revenue as well too. But if you look down to what the net revenue is likely to be for the conference, that's what's relevant here. When you're looking at membership, you want to know how much you're going to bring in during the year. With your conference, you want to know how much you're going to net over the course of the year. And by conference, I mean any signature event. Okay, now let's talk about your management report. Remember, we've talked about our three major categories. We've talked about our backup reports on strategic objectives, our reports on sustainability and member value performance, and we've talked about our financial report performance. So basically, these are our backup reports. Now, let's move on to the management report. This is basically your need to know report. You want to make sure that you can verbally give this management report in 5 minutes or less. It's meant to be a high-level summary, and it's highlights by category. If there's no highlight in a category, you don't need to draw it to anyone's attention. If anyone wants more detail, they can go to the backup reports. So it's highlights by category. Again, no highlights, you don't need to reemphasize the metrics. Backup reports are everything else that we've just been talking about. So with your management report, you're going to have at least one bullet for each of these categories, and that bullet might say nothing more than we are on track with milestones and dates for all of our strategic objectives. If you're on track and there's no risks, opportunities, or concerns that you want to raise, that's all you need to say. Really what you're doing is you're focusing only on what requires attention in your management report. Remember, they want more information about the finances, the strategic objectives, they can drill down into the backup reports. Your management report focuses only on what they need to know now. And if you're trying to decide, does this belong in the management report or not, err on the side of brevity. Because remember, it's already in your backup reports. If you're not sure whether you need to share it with them or not, then maybe it means you probably don't have to share it with them in your management report. Because remember, it's already in your backup reports. In your management report, you want to talk about risks and opportunities as we're facing things right now. Are there any green lights that are going to allow us to go roaring ahead a little faster than we thought we would be able to? Are there any red lights that means that we have to look for danger in our lane, potentially slow down? That's what you're trying to bring to the attention of your board. And you also need to tell your board, in the same way that you would do this on your agenda, what do you need from them? Do you need direction? Do you need a decision? Do you need a vote? So make sure that for everything you're choosing to draw their attention to, and remember, this is need to know. Do I need a decision from the board? Do I need direction? Do I need a vote, or do I just need them to be aware of it? So make sure you're clear whether this is where you are in the continuum from awareness through to vote. That's the right information. Now, what format should your management report look like? Definitely 1 page or less, and you want bullets and visuals. So this is not 1 page of tightly written characters. This is 1 page or less with a lot of open space on it. Use bullets. You don't want to write out the entire narrative. Remember, you're going to give a verbal on this. Any visuals that are going to really help to get the point across. Make sure that with your management report, you're using the same format each and every time, so that your board members will get used to knowing where they need to look for certain information. And make sure you give them the verbal update that goes with the management report. I really encourage you that when you've got your management report ready, it's ready to go into the board package, but you haven't sent the board package out yet, time yourself. Look at that 1 pager, hopefully less than 1 pager, and verbalize it. Do it in front of a screen, in front of a mirror. Speak to the points you've got on your management report and time yourself. You want to be comfortably under 5 minutes. And if you can't say it in comfortably under 5 minutes, then cut back. Remember, you've got the backup reports. You can always say, if somebody says, well, what about this, that, or the other thing, you can say, fine, I'd like to draw your attention to the strategic planning update. It's in this part of your board package. Here's where we are. More detail is available there. So let's talk about your backup reports. Remember, we talked about the fact that you want your backup reports in basically three areas: strategic objectives, sustainability and member value performance. I like to put those two together. And then we've got our financial performance. That's where you've got your backup reports, and that's where you've got your detail and you've got your full metrics. In your backup reports, for that format, remember, you're providing more dense information in your backup reports. You want to make sure that you're using visuals, and you want comparatives in your backup reports as well too. In some cases, maybe you're just looking at comparatives against last year. So for example, if you're looking at revenue and expenses, you want to look at where you were last year at this time and where you are against your current budget. If you're looking at your member attraction rate or your member retention rate, you probably want to be showing 3 years of rolling statistics. So you want to be able to see the trajectory there. Is our attraction rate increasing? Is it decreasing? Has it plateaued? Decide how many years of comparatives you want, depending on what the number is that you're looking at. And whatever you do, make sure that you're being consistent, because that's going to help keep your board better informed and understanding the direction that you're going in. So let's summarize this. Your directors need meaningful and digestible information. What that information consists of is you finding the right information and collecting the right information, because you can't do reports if you don't have the underlying information. Make sure that you're using the right comparatives and metrics to get the point across in the way that you, the CEO, and the senior management team can easily follow and understand, and that there are triggers built in there that you're going to immediately be able to know by looking at a certain format. Wait a minute, that looks a little off. I better drill down further on that. And then make sure that you're presenting things in the right format. So let's start with the right information. From a summary perspective, we're basically looking at 3 areas. Your sustainability and your member value performance are 2 separate areas, but they're really all about what you're delivering to members, what the engagement is, and how your members are responding by either joining the organization or renewing their membership in the organization. Then you've got your strategic objectives and your financial performance. So in terms of what we're looking at with our strategic objectives, again, we want our objectives listed out. What are the milestones for each objective, and what is the status for each milestone? In terms of our sustainability metrics, these are the 3 metrics that we talked about earlier, where I gave you the algorithms for the attraction rate and the retention rate. You want to look at what rate are we attracting new members to our organization, and at what rate are we retaining them. The lower your retention rate is, the higher your attraction rate has to be just to keep the same number of members. Ideally, we want a high retention rate and a high attraction rate as well too. Satisfaction rate. Remember, if you're doing research, and you should be doing member surveys, talk to a professional about how you should be asking the question and how you should be analyzing the answers. But keep in mind, for satisfaction rate, this isn't like passing an exam. 75% satisfaction is not a good number. So make sure that you have targets for each of these and you're tracking your performance against those targets. In terms of your member value performance metrics, what you're looking at is what kind of engagement you're getting from your member program. So whether that's a signature event, whether it's educational programs, what kind of member engagement do you have there? And do you have a sufficient interest from the number of members that are engaged to justify the continuation of the program? Sometimes we've got a situation where we've got members that just love a program and they would be heartbroken if you got rid of the program, but there's only 5% of our members that are still actively participating in that program. Remember, your dollar per member to deliver that program is probably pretty high. So think about how you're spending your money and your volunteer time. Those are finite resources. Your government relations and your stakeholder relations goals, think about what the impact is against the base case. And remember, the base case is what would have happened if you weren't doing anything or you didn't exist. And what your engagement is from your members for your stakeholder relations and your government relations goals. Remember I said earlier, track volunteerism. If you've got an increasing percentage of engaged volunteers, that means that you are increasing your member engagement by definition. So track what you're doing with volunteers and pay attention to what your volunteers want to get involved in. If you've got tons of volunteers for your signature event, and no volunteers for governance, that tells you something. But there are going to be people out there that do want to get involved in governance. It's a question of finding the right people and putting it to them in a way that's going to make them get satisfaction out of being part of that. Your financial performance metrics are your actual against your budget, what your revenue sources are, cash flow forecasts if you need them, and what your reserves are. Your reserves, you should be able to calculate those in terms of months of operating expenses. So if you have 3 months of operating expenses in your surplus, that's basically just enough to shut the doors and pay off everyone who needs to be paid off. If you've got 12 months of reserves, then that means you've got some runway and you can face a storm and hopefully get through the other side. But you always want to be calculating those reserves in terms of number of months of operating expenses. Finally, in terms of your management report, what we want here is your highlights by category with select metrics where they are relevant. If you've got no green lights, no red lights, no risks and no opportunities, your management report should be 30 seconds. Drill down for more information, but at this moment in time, there's no significant risks or opportunities that have not already been identified. There's nothing for you to pay particular attention to in terms of these numbers here. If you would like some help with this area in terms of deciding how you want to report, what you need to report, what is going to make the most sense to your directors, or you want some overall help with governance, you know where to find us. We'd be happy to have a chat with you and see whether there's a fit. In terms of final tips for you to consider, just before we go into live Q&A, if you are a member of the management team, senior management team, or the CEO, invest in your own knowledge. This is something that you really need to know. It's not just information your directors need to know. Your directors aren't going to know it if you don't know it yourself. You need to understand it and find a way of articulating it to them in a way that works for you and for them. Work with your team to make sure you're collecting the right information and you're presenting it in a way that's going to make sense. Everybody on your team is going to have a different approach, and that's going to be helpful in figuring out how to make this work. Ask outside your organization. If you belong to groups or discussion forums, ask other CEOs and senior management team leaders how they do it. You'd be surprised often by the useful information you can get by asking that question and literally by trying something new. You don't want to try too many new things all at once because you want your directors to have a sense of consistency, as do you, with what you're seeing. But maybe there's a new metric that you haven't shared before that might be helpful, that's particular to your profession or your sector. Try something new, maybe in terms of format. Maybe there's a better way. Maybe there's more visuals we could be providing here. Look for feedback with your board of directors as you try new things. If you're looking for a copy of the slides, just let me know. I will be happy to send a copy to you. If you are not on our invitation list, if you got the link from elsewhere, reach out to us directly. We will add you to our invitation list. Don't worry, we're not going to try to sell you anything. All you will receive from us is information and an invitation to the next webinar. And keep in mind that all of our webinars are on YouTube, so you can go there and find out and listen to any of our previous webinars, and they're divided by topic. Now, I know we've got some questions, Kevin. Let's start with the first one.
Sure. First question is, what is the best board reporting template to use?
The best board reporting template to use. Okay. I can't point to a template that's out there somewhere and suggest that you go to this website and click on this link. To some extent, it's going to be the template that works best for you. However, I'm going to encourage you to use the 3 areas that we talked about in terms of the template that you're using. You want to talk about your strategic objectives. So you need to be saying what's going on with your progress on your strategic objectives. Make that as succinct as possible. What's going on with your sustainability and your member value performance? So that's your attraction rate, your retention rate, your satisfaction rate, and your member engagement. That's number 2 that you want to include in your reporting. And number 3 is your financial performance. So that's the usual things that you would see in a financial report with the right comparatives and the right format. So those are the 3 things that you want to have in your backup reports and that you want to include in your management report. Your management report is just going to be a way shorter version of what's in your backup reports. And it might just be a single line in each of these categories if there's nothing in particular in terms of risks, opportunities, green lights, and red lights that the board needs to know now.
Thanks, Aaron. Second question is, what are the most critical sections of a board report? And there might be some overlap with the next question, which is, what type of reporting do you feel is most valuable to provide to a board?
I think these all fit into the same category. You want detailed backup reports in the areas of strategic objectives and how well are we doing, in terms of sustainability and member performance, and in terms of financial performance. So you want 3 sets of backup reports in those 3 areas. You also want a management report, which gives a really high-level summary in all 4 of those areas. So those are the critical sections. Those are the areas that are most valuable to the board, and those sections define the template that you should be using. I've given you some templates to use for the detailed reports as well, too. I really encourage you to spend some time on your financial reporting to make sure it's consistent and relevant, because that is often the area where we provide not enough, too much, or not in the right format.
Thanks, Aaron. That's a good lead into our next question, which is, what are the most effective ways to present complex data or financials so that it's accessible to all board members, regardless of whether or not they have existing financial knowledge?
Okay, first of all, when we come to the financial reports, and I mentioned just a minute ago that is often the area where we're providing not the right information or not in the right format. So I encourage you to look at the examples I've given you for income statements and how you might want to consider looking at them. Don't just report where you are as at month end. You want to report where you were at month end. You want to report against budget where you were last year at this time, and you want to report on the variance. So follow that structure. And I also encourage you to, when you're training your board members, and by the way, you want to at least provide training for your new board members. I really encourage you to do it for all members at least once a year, not at least once a year, for all board members once a year. You might want to have a slightly different program for your new members versus your more seasoned members, or maybe just a longer program where you bring in your new members at the beginning, give them the basics, and then bring in the rest of your board members if you're doing something like this online. For your financial reports, I've given you the structure, and I suggest that. For your management report, really what you're looking to do is you want to tell a story. Tell the story and focus only on what you need your board of directors to take note of now. Is there a danger or an opportunity? Why is it a danger or an opportunity? And what do you need from the board? Is this just for information? Do we need direction? Do we need decision? Or do we need a vote?
Next question is, what is a reasonable or appropriate cadence for board directing, or sorry, board reporting, so that updates remain largely strategic and don't veer too much into the tactical operational side of things?
Well, if by cadence you mean frequently, then you certainly want to be doing something along the lines I've just described to you at every single board meeting. So every time you have a board meeting, you want a full board package that has your management report in it and has the backup reports in the 3 areas that I've described to you. I guarantee that whatever you're reporting to the board, you're already doing some of this, maybe all of this or most of it. It's really more a question of making sure that it's got everything in it that you actually need, that you're looking at the right metrics, and you're being consistent from one board meeting to the next.
Thank you, Aaron. Next question is, I know you mentioned earlier that your personal preference is for lists of tasks, but is there a simple dashboard format that you would recommend?
I'm really the wrong person to ask because I just don't like dashboards. I find that I find that people get so used to looking at them that they're not paying attention to them. So no, I don't have a dashboard format I would like to recommend. My preference is to look at it as a checklist. Here's the things that we needed to accomplish. Here's our metrics. I would encourage you to look at the metrics that I've suggested that you include in your detailed reports and your backup reports. And when it comes to a management report, if there is a metric there that is trailing, and you really want to emphasize it, by the way, you know, our member attraction rate has been going down for the last 3 years, and it looks like so far this year we're behind where we were last year. That's the kind of metric that you actually want to share. So it really depends on what's going on with your organization and what are the leading indicators and what are the following indicators for your organization.
Next question is, do you have a template of key performance indicators / metrics that we need to be tracking and reporting on?
Yes, absolutely. If you want the slides for this this webinar, or you want to go back and listen to it, look at the information that I provided under the right comparatives and the right metrics. That's where I'm showing you the metrics that I think are important for you to report on. And for those that you actually need to use an algorithm, I provided you with the algorithm for how to actually calculate that.
So next question is, should the management report be presented at each board meeting?
Absolutely. Keep in mind that if you're lucky, all of your directors will have read all of the backup reports. That's if you're lucky. Chances are every single director has not read all of the backup reports. So at a minimum, they may have read none of it. You don't know. It really depends on what kind of a board that you've got. So at a minimum, you want to make sure that they've heard your verbal version of the management report, because that means even if they haven't read anything else, they've at least listened to your verbalization of the management report.
All right. So far, this looks like the last question, but how frequently should boards meet? And then maybe a follow-up question would be, if there isn't a one-size-fits-all solution, what factors should people look at when they're deciding how frequently to meet as a board?
Okay, excellent question. You know, there's a lot of boards that are still meeting on a quarterly basis, simply because in the old days before COVID, we used to bring everyone across the country, if it was a national organization, or across the province, if it was a provincial organization, we would bring them in 4 times a year. And for time and financial reasons, 4 times a year was really as frequently as it was practical. But in terms of keeping the board informed and engaged and providing the CEO with the direction that is appropriate, I really don't like quarterly meetings. I just don't think they're frequent enough. One of the challenges with quarterly meetings is just to get the information across in terms of what happened since the last quarter. It requires a lot more information. It requires more digestibility. people have forgotten what happened at the last board meeting because it was so long ago. And I just find you got to do too much catch up. It takes a long time to go through everything that you've got to share with a board. So you end up with longer board meetings, which makes it more difficult for the board members to digest information. Remember, if you're asking a board member to attend an 1.5-hour meeting, it's totally different than asking them to attend a 3-hour meeting. They simply won't have the level of absorption of the information by after 2 hours that they do at the end of the first half hour. So my personal preference is to have a short board meeting every month or every 2 months. We have so many more tools now than we had pre-COVID that I think most people are pretty comfortable having online, in person, but online board meetings. It's not as essential to get together in person as often as we did before, but it sure is helpful. From time to time, just in terms of understanding who you're interacting with, the CEO needs to meet face-to-face with directors at least on a regular basis, whatever that looks like. But it doesn't mean that that requires quarterly board meetings. Something more frequently online at lower expense and less time commitment on the behalf of each board member makes it easier. And it does mean they're more likely to remember what happened at the last board meeting. That's our
Thanks,
last
Erin.
question, Kevin.
Sorry, Erin. So we just have one more question. That is, so for associations whose chief source of revenue is membership dues, where should they be looking to diversify their revenue?
That is an excellent question. On the one hand, you might say, well, what we want to be doing is maybe what we should be doing is putting together a signature event where we can generate a certain amount of surplus from that. And, that's kind of a logical extension of member dues. Yes, it is, but it's also contingent on the number of members you get. Your ability to draw members out to a signature event is a function of how many members you've actually got. So if your other revenue is really highly tied to what your membership is, that may not be an appropriate source of diversification, because if your membership went down, the revenue from a signature event would probably go down as well too. So sponsorship is an obvious one to consider. If you're not doing any sponsorship, or you're only doing sponsorship attached to a signature event as opposed to year-round, think about sponsorship and think about year-round sponsorship, where you've got an opportunity for someone to have a year-round relationship with you, multiple points of contact, and multiple opportunities to make a connection with your members. I could spend a lot of time talking about sponsorship. I won't, but we do have a lot of that information on our YouTube channel about sponsorship. Is that our last question, Kevin?
It is.
All right. Well, let's just talk about our next event. Our next event is going to be after the holidays on January 23rd. As we do every year in January, we are going to give you our prediction for 2025, and we'll let you know what we think you need to be paying attention to in 25. What are the key areas to focus on? We will also ask you for your feedback. Kevin will be reaching out to you to get your feedback. Your input's important to us. Right about now, we are planning the lineup for 2025 for our webinars. So if you've got any suggestions, any content that you would like to see, please let us know. We would love to get your suggestions. That concludes our webinar. Thanks for tuning in, and we will see you in January.